Today's recording is from the Buying Without Banks Zoom meeting that I run every month, and it is specifically focused on seller financing. So, with rising interest rates and everything going on with the economy and the real estate market, now is a perfect time for seller financing. And so, in this presentation, I take you through what seller financing is and specifically how to talk to the seller so that you get approved for the loan, which is in the end that result that we want. All right.
See, yeah,
All right, here we go. Okay, so essentially, a lot of people get confused or have a hard time really understanding seller financing just conceptually, big picture. And so at the biggest level, or largest level, it is the transaction really is the same as a traditional transaction. The difference is in a traditional financing, the bank provides the money and we pay the bank over time for that property. And with seller financing, the seller provides the money essentially for that deal, and we pay the seller over time. In its simplest terms, that is, it is very similar to a traditional deal. Okay. And so to get you excited and fired up for where we're going and what we're doing, think for a minute, what if funding was not a problem? I know so many people that I talk to, funding really is one of the big obstacles that they see for going into real estate or really growing their business. And so think about how many units would you buy if funding wasn't a problem? And what difference would it make in your life if you weren't restricted by the funding? Because really that's why we're all investing, right? Nobody wants 100 tenants and toilets, but we want the cash flow from those 100 rentals. Okay. And a good mind shift for us here is that the money is made in putting deals together. And so it is not necessarily that we are going to be asking a seller for anything. Okay. We're going to be giving them this amazing opportunity that they didn't know was possible. And so it's not that we're asking them to do something. It's not that we're asking them for funding. It really is that us as real estate investors, and the way we can structure the deal is the prize. And so we are going to really serve them. And so if you've asked yourself, which a lot of people ask me this, why on earth would a seller finance the sale of their own property? Or why would they let you pay them a little bit of money each month over time to pay for the house? And we're going to go into some very specific reasons, but primarily the reason is that people all the time have problems or problem houses, and their main focus isn't necessarily the money, right? Their main focus is getting rid of that problem house. Okay. And so we can help sellers get rid of their problem houses or solve their problems. I love this quote from Zig Ziglar. This is a foundational concept for my business and how I built it. Zig Ziglar said, you can get everything in life you want if you will just help enough other people get what they want. All right. So we are not going to ask sellers to do something that's not in their best interest. We are going to serve them, and we're going to give them what they want. We're going to structure deals creatively so that really helps them. And in the process, we're going to get everything we want, right? We're going to be able to grow our business. We're going to be able to buy properties or do deals without having to have a lot of money or without having to get a loan from a bank. And so this is the foundation for everything we talk about tonight. I'm going to talk about specific words to use to get your loan approved. I'm going to talk about how to approach the seller And I want to make sure that you understand that is in no way from a perspective of manipulation, right? It is entirely from a perspective that we want to do everything correctly or the best that we can so that they are receptive to what will really help them. Okay. And so question comes up, is now a good time? And if you are watching the news, the housing market's in the news and banks are going under and there's a lot of turmoil right now. And in reality, now is a perfect time. I would argue that seller financing is really effective anytime because there are always people who have problems that we can solve. But right now, with the economy changing, with inflation, with all the things going on, there are a lot of people who are in difficult situations and we can help them, we can serve them. So I hope you're excited about this concept. Here's a quick example of a subject to deal. And if some of the terms that I use in seller financing don't quite make sense or you're not familiar with the term, that's okay. Don't worry about it. It'll make sense as we go along. Just gather what you can. All right. So in this deal, this house, the seller had very little equity. They had refinanced and what equity they had out. And so they had very little equity. Then they got married, had some kids, and suddenly outgrew the home. So they had good incomes, no problems qualifying for a bank loan. So they went ahead and bought their next house with more space. And they were getting ready to move into their new house, but they were scared because they didn't really want to have 2 mortgage payments, right? Nobody would want to have 2 mortgage payments. And they've kind of figured that either they were going to have to bring cash to closing or they were going to have to manage this property as a rental. They did not have any idea how to manage a rental, had no interest in managing a rental. So the solution was, right, I met with them, talked to them, figured out exactly what their problem was, offered to give them a little bit of money for their little bit of equity. And then I took over the payments on their mortgage that they had on this house. And they were thrilled because they no longer had 2 mortgage payments. They didn't have to manage a rental. I was happy because I got a great house in a nice neighborhood that cost me very little money. I think I had to bring $3,000 to closing and it needed very little work, right? So a win-win where I was able to solve their problem, not bring very much money to the table, use their financing that was already on the house. Anybody want a deal like that? Give me a thumbs up if you would like a deal where you only have to bring $3,000 to closing. Anybody? All right, Brent, I see it. Brandon, great. Appreciate you. All right, so my story.
How do you find these people though? How do you find this perfect deal?
How do I find the perfect deal? We are going to get into that. All right. We will talk about how to find it. And it is not, I love your question, but I would argue it is not a perfect rare deal, right? That is one example deal, but there are all kinds of people right now who have refinanced in the past few years because interest rates were at a record low, prices were at a record high. Suddenly, housing prices may be slipping because interest rates have risen, and there are a lot of people in that exact same situation. So don't look at it as this rare diamond in the rough, right? It is just a matter of finding that person. That example, they reached out to me. It was a friend of a friend who knew that I bought real estate and thought that I might be able to help them. So the quick answer, I guess, would be tell everybody that you're buying real estate as far as that one. But we're going to get into the details of how to find them. Good question. So for me personally, it was just 10 years ago, not quite 10 years ago. I was sitting in a dark hospital room, and the only light in the room was the monitor over the bed. The only noise in the room was that rhythmic beeping that we all know that goes along with that monitor. And every now and then the rhythm would change and alarms would go off. And I had just returned from Kenya. My family lived in Kenya for 4 years. We were missionaries there, did a holistic ministry. And as part of that work, we had to raise all of the money for those 4 years. And I didn't have any idea how to raise money for ministry, but I knew that action leads to results, right? So when we got our budget, it was $500,000 or just shy of $500,000 for those 4 years. And I went out and I started telling people. And I told them all about the great needs in Kenya. And I told them all about the work that I was excited to be a part of. And what happened really wasn't much. And so I got kind of frustrated because the people that I was speaking to, I knew they cared about those needs, right? I knew they cared about the work in Kenya. I was speaking to faithful people that I knew and churches. And so the more I reflected on it, I realized that if they weren't donating, there was something I was doing wrong. All right. And so I switched my presentation and I changed it so that all I talked about was opportunity and impact. And if you're taking notes, I hope you are taking notes because we're going to cover a ton of information. Write those 2 words down because those 2 words are key in seller financing as well, opportunity and impact. So I no longer talked about the needs in Kenya or the work I was excited about. I talked about the opportunity for that church or individual to be involved in a work in Kenya and the impact it was have not only in Kenya, but for them and their church. And once I made that switch, our business, or I was able to raise money for the ministry very easily. And we ended up raising close to $1 million for that ministry. And we're able to do child sponsorship and build a school building and do a lot of work that we never thought possible. And so when I came back and was in that hospital room, we had come back for my youngest son's birth, and he had some health issues. And it ended up he needed a trach tube and a breathing machine, and so we couldn't return to Kenya. And so as I was sitting in that dark hospital room, I was obviously worried about him and what he was going through, but also I knew that I couldn't return to Kenya and my job was going to end very soon. And the house that we lived in that was provided by one of our churches, we would have to move out of. And the car we had borrowed, we'd have to give back. And so I had to figure things out very quickly to provide for my family. I don't know if anybody's ever been in one of those situations. All of us tend to have one of those moments where we really need to figure things out quick. And so it was in that moment I decided I was going to go into real estate. So I didn't know how, but I was committed to going into real estate and providing for my family. And I knew that action leads to results. So I went out and I started telling everybody I knew, hey, I'm buying real estate. I'm buying houses. I told people that didn't even ask, hi, my name's Chad Harris. I buy real estate, right? Now, I had no way to buy real estate. So more than just telling people, I was casting a vision for my life, right? I was trying to convince myself that it was possible. But there was an interesting thing that I realized when I told all of these people what I was doing. I heard a lot of similar responses. I heard, I always wanted to do that, but I didn't know how, or I've been wanting to do that. I love design. I love making ugly houses pretty again, or I think that's great. I've been watching HGTV, right? And I love those shows on HGTV. And I realized there were a lot of people who wanted to go into real estate, but didn't quite know how for whatever reason. And so I served them and gave them an opportunity to go into real estate as a lender in my business. And I explained to them the impact it would have on their investment portfolio. And that's how we started to grow our business. And so we bought our first 25 units with only private money. And in the process of that, I realized that some sellers I was talking to, it didn't really work to make a really low all cash offer. And we're going to talk about how to make offers tonight. But some of them, the ones that really worked for a low cash offer, then I raised the money from a private lender and it was easy. But there were some who didn't really need the cash and they wanted a higher price. And so it didn't work for private money. And so I realized that it was better to serve them by giving them a seller financing offer. And so we added those in at about 25 and didn't get a bank loan until 55 units, and still at 80 units, have never used a bank for the purchase of a property. And so we've built business systems and a staff, and one of the rewards of what we've been able to build is that I get to do things like this, public speaking, which I love, and coaching and teaching, and have time to do that. And I have a podcast, True Wealth Investors Podcast, where I interview a lot of great investors and get to share a lot of free content. And then I have a weekly mastermind, the Elevate Mastermind, which is really active real estate investors looking to build a rental portfolio. We meet weekly over Zoom. And so I get to do what I love and am passionate about. And additionally, I get to provide for my family. So this is my crew. And this was about a year and a half ago when we closed on our dream farm. That was a dream of ours for a long time. And it's 100 acres down in Southeast Ohio, where we get away for the weekends and different adventures with friends. And we bought that farm with seller financing. And so what I'm talking about tonight, the specific details, the specific concepts that I'm talking about tonight will have a drastic impact, not only on your business, but on your life, right? It can drastically impact your life. I thought the farm was a long, distant dream that I would really have to grow my business to get to. But when I really stepped out of my box and was passionate about trying to serve people, I was able to find a seller of a farm who had a problem, and I could provide a solution for him, right? And so whatever it is, whatever your dream is, whatever you are really passionate about creating, I would encourage you, if you take nothing else from what we talk about tonight, the solution, the achievement you are after is a lot closer than you think it is. So take action. Don't sit and plan and think about it. Take action, and you will be amazed how quickly you can accomplish it. All right. Okay. So I am, hopefully, as you can tell, very passionate about this. I am excited about it and the results that you can get from it. So let's get into the details here. All right, so what is seller financing? And it's in its simplest sense, like we talked about, it is a transaction like just about any other, except that there is no bank involved. The seller is not only selling the property, they are providing the financing for that loan. And so you're going to pay them over time for that property instead of paying the bank over time. And there are a bunch of benefits for seller financing. So we might want to use seller financing because it's easier than banks. If you've ever applied for a bank loan, it is a long, tedious process. I don't even want to think about the paperwork involved for some of those early bank loans, those initial ones with the bank, but it's easier than banks. The approval process is just a conversation, which is amazing. There's no credit checks. It really is just going to come down to you and that seller having a conversation. It's cheaper than working with banks. There's no points or origination fees. You can negotiate the interest rate. That's more flexibility. You can structure the deal all different ways. There's no limit on your number of loans. It's easier to renegotiate should, the worst happen, should the economy really go crazy. And maybe in your situation, bank funding isn't even an option, which was my situation when I started. And that's not a problem. That shouldn't be a hindrance to you getting involved in real estate. All right, so there are quite a few different types of seller financing. You can read down the list here: land contract, subject to, wrap mortgage, owner held mortgage, lease option, 0% interest offers. And I'm not going to go into the details of each one, but the point of this is that what we're going to talk about tonight works for any of those. Okay. Really, what determines these structures that you would use to actually close the deal, really what determines that is what financing the seller already has. So if they already have a mortgage that has good terms, or they don't have a mortgage, or they have a mortgage but a lot of equity, those situations will determine what structure you use. But in the end, the seller doesn't really care what the name of the structure is, right? What the seller cares about is when they're going to get their money and how the transaction is going to take place. And so if you can talk to the seller, which we're going to lay out exactly how to talk to the seller and negotiate terms, then you can work with the title company or an attorney to actually figure out the structure. So don't get bogged down in that. Just know if you can figure out the terms with the seller, you can work out the actual details for closing. All right. And whatever structure you end up using, what we're talking about tonight perfectly fits for it. Okay. So getting more specific, why do sellers offer financing? And I just want to make sure everybody has it from the right perspective. The reason they're going to offer financing is because it's going to benefit them. All right. So we're never going to ask them for financing. We're never going to ask them like it's a favor. And in our culture, we tend not to like to ask for things or be asked for things, both, right? And so in our conversations with them, the focus should always be on them and what their situation is and why they want to sell the house. And then we can present an offer that really helps them. All right. Now, there are a whole bunch of reasons that a seller would sell on terms and a bunch of benefits to them. These are the 5 major ones. All right. So generally, if a seller is going to offer financing and be paid over time, we are willing to pay a higher price. So they will get a higher sales price on their property. And if you pay interest, we'll talk about the payments, but they will actually make that interest as well. So they'll make a lot more money for their house. Additionally, there are a lot of benefits with taxes. So if that, especially if they're an investor and they've owned the property for quite a few years and they've taken all those tax benefits as an owner, the depreciation, then if they sell all cash, they're going to probably have a large tax burden. And with seller financing, they can either defer that tax burden, stretch it out over years, or in some instances, they can even eliminate that tax burden, which is a huge benefit to them. And a lot of sellers, well, nobody likes paying taxes, but a lot of sellers, that's one of their concerns. Additionally, you can provide monthly income for them. If they are a retiring landlord, think about this. They've been benefiting from those monthly rent checks, and that's been their focus for years. And so the idea that they would sell the house and lose the monthly rent checks is, one, scary, but also that's a major detraction. And they're constantly wrestling with, I'm tired of the maintenance and the management. but I don't want to give up the monthly income, right? Naturally. And so we can structure the deal where we handle the management and maintenance, and they still get a monthly payment. And so they may not get as much income, but they're still going to get some monthly income, which they really like. If they don't have a use for that money, then the return that they're going to get in selling to us is better than they can get elsewhere. So usually the interest we're willing to pay for that financing is higher than they're going to get unless they're willing to risk it all in the stock market. And then another really common one is a quick and easy close. All right. A lot of people don't want to sell traditionally because the house needs a bunch of repairs, or they're embarrassed to do showings, or for any number of reasons. There's a whole bunch of reasons that fall under that, but it's really beneficial for them to get a quick and easy close. All right. So here's another real quick example. This was a land contract. This was an investor. He was what would be called a tired landlord, right? He had managed these rentals for a bunch of years. He was tired of dealing with the management and the maintenance, but he had originally lived in one side of the double. And so when we were walking through, he was showing me the property. It was very personal. He was talking about specifically what repairs he did and why he did them. And you could tell that it was like an act of love for him instead of just an asset that he was looking for a return off of. And so his price that he had in mind was also personal because he had put his own sweat and tears into that property. And he wasn't looking at it as, here's what the property is actually worth. He was looking at it as, here's the number of hours and years I've put into it. So I agreed with him that his property had been well managed and maintained, that the repairs had been done very well, that it was a nice property, and that I understood why he would be tired of management and not want to do the management. And I said that I could handle his price as long as I could pay him that price 10% down and then a little bit each month. And he kind of went back and forth, and in the end decided that was the best option. And he kind of liked the idea that I was an up and coming landlord, right? I was full of energy like he was when he started. And so that was the solution. He got the price he wanted. He didn't have to deal with management. I got ownership of the property and was able to make him payments each month for, I believe that was a 10-year amortization. So, all right. So how do we have this conversation? This is kind of the nuts and bolts, right? We have these example deals and we can talk about specific deals, but how do you actually sit down and talk with a seller so that they approve to give you their property and just take a little bit of money each month? How do we do that? How do we structure that conversation? So here's how we're going to start. We're going to build rapport with the seller, and you can do this over the phone if need be, but for me personally, it's always worked better in person. And so we want to, in building rapport, we just want to ask questions, right? We want to get to know that seller, because really what we're looking for is getting to know them, getting them to like us, and really figuring out what their problem is that we can solve. All right, so we're going to ask a bunch of questions. Why are you selling the house? And usually the first answer you get on why are you selling the house isn't the real answer. You need to dig a little deeper and keep asking, right? There's always a real deep reason why they want to sell that house. And usually it has nothing to do with money. Usually it has to do with some other problem. I was thinking of one recently where they initially, I had reached out to them because they had delinquent property taxes. And so initially when I asked why are they selling the house, they said they were selling because of property taxes that were owed on the house. But then the more I asked them, the more I got them to tell stories about the house and talk about really the impact, what their life would be like after they sold the house. It really boiled down to that they had some real issues with family members in the area, and they were tired of the headaches and were ready to move to a new area. And so they were going to move about an hour and a half away. And so when they talked about the property taxes getting paid off, they weren't excited at all, right? But when they talked about getting to move to the new area they wanted to be in and no longer having to deal with those problems, they lit up. And that was really their motivation. So just continue to ask open-ended questions. If you don't mind me asking, what will you do with the money? A lot of times if people get paid a big chunk of money at closing, they have no idea what they'll do with it. Other times they know they need maybe 10,000 or 20,000 to move, but they don't need the bulk amount of money, right? And so based on their answer to these questions, we can know how to structure the deal to best suit, to best serve them and help them. Additionally, ask, is anybody else involved in the decision? We want to make sure we're talking to all the decision makers. Another question, would monthly cash flow help you in any way instead of a lump sum? And I've had sellers say yes, right? That they don't really trust themselves with a big lump sum of money, and they would rather get it paid as income, kind of like retirement income. I had one seller who was worried that if they got a big lump sum from the sale of the house, their family members would try to ask and get it and ask them for help. And so it helped them to just get payments each month and not have a big sum of money in the bank. So you really never know until you ask those questions, what's going to help them the best, right? Are you concerned about the tax consequences? See if that's really one of their worries. Would you like the sale of the house to be a part of a legacy for your kids? Most people have never even thought that selling this house that is a problem in their mind could be part of the legacy that they leave for their children. And so we can get them thinking long-term, really, what are the benefits, not only them in their lifetime, but how could it be a benefit to their kids as well? Or what would make this sale a win for you, right? And ask that question in a bunch of different ways so that we can try to figure out exactly what it is they care about. Because a lot of times it's not what we think it is, okay? And so we just need to best figure out what the focus is of that seller so we can make the best offer for them. All right, so once we've asked a bunch of questions, we've gotten to know them a little bit, we've shared a laugh, right? We're hearing stories. Then we're going to use a trial close. And so a trial close is kind of where you test it out to make sure that you know what the best offer for them is. So a couple examples would be, if I could help you with blank, their problem, would you be interested, or would you be interested in selling your house? If blank were no longer a problem, are you ready to sell your house today, right? Both of those, if they say yes, then we know we definitely understand what their problem is, what the pain point is that they're trying to get past. If they say no, or if they don't seem real committed, then we kind of have to go back to the questions because we've missed something. We don't really have the right pain point. Additionally, this is a great one here, the last one. How would you feel if you no longer had to deal with this property, right? Get them, for a lot of sellers, it's really stressful for them to sell this property. And in many instances, they've wanted to sell it, but it's too stressful and they don't know how to do it and they've put it off. right? And so for them, it's very stressful. For us as real estate investors, it tends to be transactional because it's just another house, and and so when you do it a lot, it's not nearly as stressful. And we have to remember that for that seller, it is. And so it's really beneficial if we can get them to not focus on the problem of the sale, but focus on the impact, how much better their life will be once they get through the sale, right? And if you notice in this picture, they're in the picture, they're sitting across from each other at the table. And in reality, I always try to have the conversation be like the seller and I are sitting on the same side of the table. So we are in this together. The problem is, how do we structure a deal so that the seller can get rid of this problem property, and I'm on their side trying to help them figure out a solution, right? And so we're going to work together so that they can get through the sale to where they really want to be. Okay, and a few key phrases to use. I know I keep going back to this opportunity and impact, but that is really crucial. So focus on that. Always, here's a few really good ones. Usually when I talk to sellers like you, they want an all cash offer until they realize the benefits they get by selling on terms. Or usually other sellers like you like the idea of continuing to get monthly cash flow. All right. Now, those are very true statements, but a lot of times when we're dealing with a seller, if they don't know us, they may not trust us very much yet, but they feel like maybe this is a very odd way to do a real estate transaction. They've never heard about seller financing. And so this reinforces, one, that this is something we do all the time. It's common. And two, the sellers that we have worked with were really excited about it, right? They benefited because they did a seller financing offer. And so if you haven't done a deal yet and you don't feel comfortable making these statements, then just change it a little bit. So usually when other real estate investors I work with talk to sellers like you, or usually when my mentor works with sellers like you, right? The concept is the same. It's just reinforcing for them that this is not that rare. It is common, and there really are a lot of benefits for them. It's just helping them be open to the idea. The third one there, other sellers I've worked with like that they don't have to deal with repairs on their house. Right? Who doesn't want to deal with those repairs on the house? They've been living with the repairs for 15 years. They've been putting them off for 15 years. And so we're reinforcing that they don't have to deal with them. Is this good stuff for anybody? Anybody with me? All right. Great, great, great. Love it. Love it. All right. So here's another example deal. This was the farm that we purchased a year and a half ago or so. It was a very interesting deal, and you guys will benefit from this short story. So I talked to this seller for probably 9 months before we ever nailed down any details. And every time I talked to the seller, he would say, I don't want to sell. I don't want to sell. I don't want to sell my land, which really made no sense to me because I wasn't quite sure why he kept calling me back, right? So, but each phone conversation where he would talk about how he didn't want to sell, we would talk about the farm, we would talk about the outdoors, we would talk about family. It was never about details of a transaction. It was never about numbers related to the farm. It was just building rapport and me getting to know him better and sharing information about me. And then at some point in one of those conversations, I asked, I forget the exact wording, but it was essentially, what problem could I solve so that you would be ready to sell? And he said, whoa, I never thought about that, and went around. And in essence, what it boiled down to was He wanted to be able to sell his current farm, which had a lot of management, mowing grass, taking care of buildings, things like that. And he wanted to use the money from that to buy the next property, which would be low maintenance. And he didn't want to have a period in the middle where he didn't have a property. And so we offered to purchase the land, give him the money that he needed to fund his next deal, and give him, I believe it was 6 months possession, so that there was no time in between where he didn't have the property. And that was it. Once we figured out what his actual problem was and I offered a solution, then figuring out the details of the deal went very quickly, right? It was just a matter of me building rapport and figuring out how I could solve his problem for him. All right, so here's the part that you're always going to run into. And as I've been talking about this tonight, I'm betting that you have already thought in your head, but what about when they say this? They're going to object. They're going to want more money, whatever. You've had objections come up in your head, probably. I'm betting. And so we need to know ahead of time how to address those objections, right? And so, number one, the best way to deal with objections is to understand that when they object or ask questions, that it is not something personal. It's very easy to take those questions as personal, like they're questioning us or attacking us, but we need to just accept that that's part of the process. And so the best way to handle objections is to address them ahead of time. So before they ask the question, we need to know they're going to ask that question and give them the answer. And so they're going to want to know, what security do I have, right? How do I know you're going to do what you say you're going to do? Every seller is going to have that question, or should. Every seller should want to really know that we're going to do what we say we're going to do, right? So we want to make sure we cover what security they have, that we're going to put money down at the property that we don't want to lose if we don't make our payments, right? Or maybe we don't put money down. Maybe we agree that we're going to make repairs, which will make that property more valuable. We need to talk about our character and our company, that we have a history of doing what we say we're going to do, right? Obviously, they want to work with somebody of good character. We're going to talk about the title company that we're going to use, that the documents will all be drawn up by an attorney, and that they will be listed as co-insured. So if there is some catastrophic fire or something extreme and there's an insurance payout, they'll be listed on that policy. So we know they're going to have those questions. We want to go ahead and address it beforehand. All right. That demonstrates we know what we're talking about. It also demonstrates we understand their perspective and we're helping them. Okay. So then after that, they're still probably going to have questions. And I tend to put those into two categories: reasonable objections and unreasonable objections. So reasonable objections would be, what is the process like, right? How does the closing work? When are we going to sign documents? When does the money get paid? How are you going to make the payments? And reasonable objection is, how committed are you to this? If you're buying a rental and the tenant ends up being terrible and you have a really bad situation with the tenant, they're going to want to know that you're still committed to the deal and you're not going to back out. And so if it is a reasonable objection, then we want to answer their questions, right? We want to reassure them that what the process is like, and it's smooth and it's easy, and how we'll get the documents prepared and how they'll receive their money each month and how committed we are to it, right? Naturally, we want to reassure them of all those things. Now, if it's an unreasonable objection, and that could be a crazy interest rate, maybe they want 15% interest, or they want 200,000 for a house that's worth 125, or they'll give us terms, but they want the amortization over 5 years. And so the payment would be much more than the rent. Any of those unreasonable things. Then it's always good to go back to the idea that we're sitting on the same side of the table. We're in this together. The deal doesn't work if it's highly beneficial to them, but puts a huge burden on us, right, as the buyer. And so for this deal to work, it has to be beneficial to both of us. And they have to understand that if they put a huge burden on us, let's say negative cash flow, that would be a very risky deal for us, but it would also be a very risky deal for them, right? And so we don't want it to be high risk for either one of us. So that's how to handle unreasonable objections. You don't need to deal with 15% interest like it's a reasonable thing. And then always bring it back to opportunity and impact, right? The opportunity is we can work together and we can get a solution for this seller and they'll be done with their problem property. And the impact is how great is it going to feel for them to get through the sale and still get monthly income and not have to deal with the tenants or not have to deal with the family member living in the property or whatever that headache is they're tired of dealing with, right? So always bring it back to the opportunity and impact. So even if they have an objection, the reward is much better than the objection and they should move forward. Okay, so now making the offer. I referenced this in the beginning, and we're going to make 2 to 3 offers, and I'm going to go into a little bit more detail than I have before in any of our prior meetings so that we can look at exactly what these 2 to 3 offers could look like and which one we may prefer. All right, so here are how we can lay out 3 offers. So if we're dealing with the seller and we think we understand their pain point, but we still want to give them multiple offers because you never quite can tell what they're going to choose or what's best. So we're going to give them a really low price, all cash offer. If they need that cash at closing, then we need to get the property at a discount. And if that's the offer that they take, then we can wholesale that property, or what I prefer is using a private lender to fund that deal. Additionally, you can use a hard money lender, but we're always going to use somebody else's money in that all cash offer. All right. Now, additionally, we're going to give them an offer where it's a medium price. They'll get some money down and then they'll offer financing. So we're going to make them payments over time. And we should have already talked about this with them, that we're either going to buy all cash at a discount or we're willing to pay more if we can pay them over time. All right. Don't even need to use seller financing, that term, because that's a real estate term. They just want to know they're going to get some money down and then get paid over time. If price is the thing that they really care about, then we can make them a high priced offer, even possibly a price above what the house is worth, with little to no money down and 0% seller financing. So 0% seller financing offer, that means that there is no interest in that payment. And if you're familiar with an amortized payment, let's say a 30-year loan, the amount of interest that you pay is generally much more than the principal of the original sale price or the original loan. And so it's very beneficial to us. We're going to look at some specific numbers with this. Okay, so here are, if we have 3 offers, we're going to look at this as an example property where the house is worth $150,000. All right. So the first offer here, we have our low all cash offer. And I structured these three offers so that the monthly payment really is about the same. It's negligible. All right, so the first low all cash offer, we're going to offer them $100,000. And we're going to borrow this from a private lender or a traditional financing situation at 8% over 30 years, and our payment is going to be $733. All right. Now, if we look at the total cost of that financing through those 30 years, principal and interest, we're going to pay just over $264,000 for that house with a $100,000 purchase price. Our second offer, a little bit higher price, but the seller provides financing. We're going to get the loan. We're going to offer $135,000. We're going to pay 5% interest over a 30-year term. Again, our payment is $724, about the same. And over the lifetime of that loan, we're going to end up paying $260,000. All right, about the same. Now, our third option, we're going to offer them for their house that's worth $150,000. We're going to offer them $170,000. Now that is going to be really attractive to that seller, right? Any seller who can get $170,000 for a $150,000 house, but it's going to be 0% interest, and we're going to pay them $700 monthly, which means every month the balance of that loan goes down $700 because the payment is all principal. And so that loan will pay off in just over 20 years. And the total cost is $170,000 because there's no interest. All right. So any real estate meeting you go to or any thing that you look at, usually people are talking about how do you find deals with where you can buy it really cheaply, right? 60 cents on the dollar, $100,000 and get a $150,000 house. But if you look at the total cost with the financing, it actually would be more beneficial to us to pay $170 for that house. All right. So again, we're going to do one low price, all cash, and use other people's money, or we're going to do a mid price and high price with seller financing. Whatever option they choose, they're all going to be good, right? When we make these three offers, it shouldn't be that we really care which one they take, but whatever 2 or 3 offers we make should be good for us and should be catered to really help them. All right. Now, I have this process board that has a lot of detail about exactly what you cover in the first call and what you cover when you meet the seller. This is what I use in my business, how we follow up after making the offer. It's kind of small and a lot of detail. I'm not going to go over the whole thing today, but I will email you, everybody who registered, I'll email you a PDF of it. All right. Sound good? And you can look that over. You can email me any questions you have on it. But I think that'll be really beneficial to you. And one thing I will talk about is right off the bat, when I first talk to the seller, I'm going to explain to them the ways that we buy houses. It's either all cash at a discount, or we're willing to pay more if we can pay them over time. And so there's no surprise at the end when they get multiple offers. They know that that's how we buy properties, right? And how we can possibly help them. All right, in closing, this is my little guy, my youngest, and he was the motivation for me to take action when I started. And I would encourage you to know your why. Be crystal clear on the rewards that are at the end and take action now. don't put it off, because everything you want is much closer than you think if you just take action today. All right. All right. That was a lot of information, and I want to answer any questions you all have.